Here with this week's hottest stories in the investment world, this is Zacks Friday Finish Line.
Hello and welcome to a special edition of the Zacks Friday Finish Line. I'm content writer Ryan McQueenie here with editor Maddie Johnson.
Hello.
So we've got something very special in store for the investors today. Not a Zacks Friday Finish Line per se, not the podcast you've become accustomed to, and I can only hope eagerly anticipate every week. But instead, we are going to be looking at a little bit of a deeper insight into the IPO market this year. This is something we've covered on the show before, Maddie. I think we talked a little bit about the slow start to the year.
I think it was in one of our first episodes. We kind of touched on this sluggish market that we have been entrenched in, if you will.
Yes, and so we've come a very long way since then.
Yes.
But we're back on this topic because it is one that demands plenty of attention. We actually have a very special guest with us today. We're actually going to be interviewing Kathleen Smith, a founder from Renaissance Capital, which is a leading provider of pre-IPO research, investment management services, index services, as well as a very informative IPO center on their website that covers just the latest news regarding companies that are going to go public, companies that have recently gone public. They also manage 2 ETFs and a mutual fund. So this is just the one-stop shop for everything IPO related, and definitely the best source for IPO research and information. Kathleen Smith specifically was a founder of the firm, which is now 25 years old. And before that, she spent 13 years as an investment banker.
Working in the tech industry.
Yeah, with a specific focus on up-and-coming tech companies.
So she's always had a passion for that.
Definitely, yes. And her passion definitely shines through. We're going to be doing we're going to have 2 halves to the interview. The first half, we're going to take a look at the slow start to the year, as we mentioned. And then in the second half, we are going to speculate a little bit and look forward for what we can expect for the next few months and the remainder of the year and even onward. Okay, so we started 2016 with historically poor performance in the stock market overall, and relatively slow activity in the IPO market. So there was global economics concerns, including the economic instability in China, uncertainty about rate hikes in the U.S., and then obviously everything involving all of the drama with Brexit. That seemed to go on for months. Would you say it's fair to blame the slow start to the IPO market on those 3 issues alone?
Well, yes, the IPO market had a slow start, and some of it is macro, but also the added importance is that the returns on the IPOs that had come out, particularly for the class of 2015, were very poor, and the negative macro conditions really pulled down the returns of those companies that went public in 2015. So that meant that investors looking at the IPO market were nursing losses from the prior deals and weren't going to look at anything new until both the macro conditions got better and the valuations were reset lower for the IPOs of 2016.
So in your opinion, we have those macro and microeconomic concerns. Do you think that, with everything that happened at the start of the year and everything that continued to happen through the first half, do you think that the IPO market was destined to be sluggish this year? Do you think there was any way for them to kind of escape?
Yeah, or even in other words, was this something that was easily predictable?
Yes, what we do is we have an index, a Renaissance IPO index, and when that index underperforms the market, meaning the basket of recently public companies trades down, we can tell that it is going to be hard for new companies to tap the market. So we could see that from the returns that we were going to have, there's going to be a hit to issuance. But let's remember, the IPO market has two sides. It comes from an issuer standpoint, saying, well, not too many can get done, so we look at it and say it's sluggish. But their investors on the other side have a viewpoint. And after the market hit bottom in February 11th, 2016, the returns for the companies that had gone public, that had already traded down, were outperforming the overall market. So from the market bottom, there's been strength in the returns. So the sluggish IPO market of 2016 may have been tough for issuers, but it's been very good for investors. The average return on the IPOs that have been done so far this year are up 28%. And the index has outperformed since February 11th. The IPO index has outperformed the S&P 500 significantly since that point. So sometimes a slow issuance market, it may be tough on issuers, but it's it could be a very good thing for investors.
Interesting. So, what types of things do we look for from that issuer's perspective when we are in a tough environment for issuers? What types of things are we looking for in the economy that could indicate that activity would pick up soon?
We would point to the returns on the IPOs that have been done. So when they start to improve or they have a positive momentum, the market tends to be more receptive to new companies. In the case of 2016, there have been some interesting new developments that we haven't seen for a while, and it relates to valuation. It's been very important because of from June 2015 until this February 11th decline of 2016, the market valuations were reset in the public market. So any company looking to go public that thought they would at the end of 2015 had to note that those others and their peers were trading down. So they have to readjust their expectations. And that meant that some companies would take time to do that and still are taking time to do that and don't want to come into the market till they get a certain valuation. Others just need to come forward. So the valuation reset in the public market significantly affects what is the decision-making of a private company wanting to go public.
That's really interesting to think about because I feel like this perspective sometimes gets lost in the hustle and bustle of any kind of IPO market. So kind of going off of that, what do you think, so instead of issuers, what do you think of companies? Like what should companies like Snapchat, for instance, what should they look for to encourage, what should they look for in the market to encourage an IPO?
And especially with a company like that, in a tech sector, are they looking at, obviously looking at returns from the IPOs that have happened, like you said, but are they also, I'm assuming, paying close attention to the conditions that are affecting their particular industry?
Our advice to a private company would be to always look carefully at how the public market is valuing their publicly traded peers. That's extremely important, and I'm sure many companies have their eye on that. We've been in an interesting market over the recent years because many private companies, instead of focusing on that, are focusing on their last private valuation round. And the public market doesn't really care too much about that. The public market is looking at a company based upon some effort to identify what the present value of future cash flows are and putting some valuation multiple. And in addition to doing a standard discounted cash flow analysis, an investor must look at, a public investor must look at what the market valuation the market is putting on the peer group for that company. So that's essential for the unicorns such as Snapchat, Uber, and others.
That's interesting, especially looking at those sort of tech unicorns, and then looking at the first half of the year. We obviously didn't see very many large tech IPOs, if any at all. And as Renaissance has pointed out in some of their research, the few IPOs we did see were a little bit less flashy and involved a lot of like European spin-offs or privatizations of state-owned entities. Is there anything that would suggest that trend continues going forward, or are we seeing a little bit of a change in the flow here?
We are seeing a change in the kinds of companies that are going public. On a global basis, we'll have a continuation of privatizations. In the U.S. IPO market, we saw a rash of biotech IPOs starting out 2016 and pretty much the absence of almost anything else. Those early biotech IPOs were done with the help of existing investors, private investors, so the sort of price discovery wasn't maybe as good as it might be to maybe a larger, more liquid company going public. But we saw a lot of biotechs, and then finally, come the spring, we started to see some more traditional companies go public, technology, industrial, some consumer discretionary companies come out, and those deals did extremely well. And in fact, the technology group that has come out since the spring of 2016 has significantly outperformed every other sector. It's up on average, the deals have been done are up on average almost 100%. Whereas the biotech IPOs, the rash that were done at the beginning of the year in the U.S. market are the worst performing sector of the IPO market so far this year now. And the biotechs in particular they're positive on average, but only single digit. So we are seeing this change, and basically, as the market has recovered in terms of numbers of issuers, we're seeing a broadening out of the kinds of companies that are tapping the market.
Okay, certainly interesting to hear about the diversification of the IPO market throughout the course of the year, specifically with how well technology IPOs have been performing. And that just about does it for the first half, the kind of look back half of the interview. And we'll start where we left off in part two, start speculating a little bit about what we can see, what we can expect to see in the next few months and for the remainder of the year.